First is Johnson & Johnson. So why would you consider this one? Well, it's because it's the big guy in the US. It's a big mega corporation and it's got all of the core healthcare and pharma pieces in it. So if you've got limited funds, which is usually the case, who has more than limited funds, then you can get a one-stop entry into the global pharma industry with this one.
Index.
Exactly. So it's got the medical devices, which is Synthesis, which is like the bits, hip and knee and joint replacements. It's got pharma, because it's got, we'll go into what's
still the big portion. I think it's about 45% of
and then you've got all the consumer healthcare stuff like the Band-Aids and the Lubriderms and all of that sort of junk.
Baby care.
$286 billion worth of market cap. So it's almost in that first division of 300 plus. Price to earnings ratio with the market 18.97, dividend yield of 2.88. This is a company that is AAA rated and has paid an increased dividend for something like, 75 years in a row. So, I mean,
it's the bluest of blue chips.
The only problem is that it hasn't exactly shot the lights out. The share chart can come up now and you'll see that it's gotten to $100 a share and then it's sort of drifted around and it's recently gone through 100 again. So I don't know. Do you think
just touching on that share price and what's very interesting, and you'll see this now when you have a look at the other share prices, how resilient Johnson & Johnson has actually been over a period of so-called turmoil, where a lot of the high flyers, the ones that have been doing really well, have pulled back tremendously. So it does have that kind of stability. You see a lot of analyst calls for them to break up the businesses because the pharma businesses tend to attract a higher PE than, say, medical devices, and then consumers just outright boring. So, why not split everything up, get a big value unlock?
So you think they're going to do that?
I don't think so, because I think over a period like this, it does show that there is a benefit of having a nice diversity, and it's not just...
The other thing they could do is do a big acquisition, right?
And they've got big cash. They've actually got a $10 billion share buyback program underway. I think they're sitting on about $50 billion in cash. They could raise money for days.
The drugs they make, though, are very exciting. Here's my list. Concerta, that's what the kids take for attention deficit disorder. Xarelto, which is for blood clotting. That's what they give you after you've had a heart attack or open heart surgery. Risperdal for bipolar disorder. That's not a nice thing to have. Or Crohn's disease, Remicade, prostate cancer. That's the sort of thing people my age get. Zytiga. I mean, this is blockbuster stuff that they can sell billions of dollars for. This is protected, as you were saying earlier. 20 years, they can charge, if these things work better than everybody else's, they can charge thousands of dollars a month for these sort of
There are a few of those brands that are facing competition.
Getting to the end.
Yeah, and often the way you take the drug, changes. So instead of injecting it and taking it orally, that's a lot more preferable. So that's where a lot of...
They make a revised version to extend the patent.
So that's where a lot of the competition comes in. But, I mean, these guys spend like 20% of their revenues on R&D. So you might sit there and think, this one's coming off patent, another company's coming in with a big competitor, they might lose a bit of margin, but these guys have scientists sitting in labs
coming down the pike that have already passed FDA approval and that are already being, finally tested on humans and that kind of thing.
And as you said, the macro picture, people getting older, people getting sick, there is always going to be demand for such products.
Okay, so this one's a bit snooze-worthy, but on the whole, it's a single entry point, and it's been very resilient, and it's probably due for some sort of excitement. So
I think there is a lot of analyst pressure, and I don't think CEOs should succumb to analyst pressure, but either deals, so more consolidation, or breaking the business up. So there is that kind of potential kicker for the share price.
Okay, good. So we're feeling hot about this one.